We talked on the 19th about the liquidation break. And our comment was that a lot of times it's a liquidation break, which is just releasing inventory that's been long. Since it's a liquidation break, it's not joined by new money selling. So the odds are usually fairly good that within the next day, and sometimes even the same day, the market will find its way back to the previous high. Additionally, you may recall that we had no excess or a poor high on the 19th. So that increases the odds that as the day goes on, the market will work itself higher. So what we're going to focus on, developing value. Overnight inventory is basically balanced, maybe a little to the short side, but basically balanced. So no meaningful change overnight. So as we're in the opening, and you can see we're just about unchanged from the previous day. A period low is exactly a tick above the settle, so no real conviction. Also, you recall opening within the previous day's range suggests that the market will be in a rotational state. If it's not rotational, then the odds are that the market will make a rapid move exactly from the opening. And it doesn't look like we're getting that so far. So the odds are that we're going to have a rotational trading day. Opening, relatively close to unchanged in the center of the previous session. Also notice we're in the overnight range. Okay, let's speed it up to about 5 times. We've got the stage set, and we know there's no conviction. We know all the auctions remain higher. Okay, so the market, the next point the market would be looking at the upside would be the overnight high. Just a very mechanical high, doesn't have to get there. Also, we had a very prominent point of control from overnight. It's also just about half back from overnight. The more prominent a point of control, the higher the odds it will be revisited. The opening is weak here, being just a single tick above the settle, so the market could easily go back to that level. Okay, let's speed it up to about 10 times. So we're not going to spend a lot of time on this day. We wanted to show you the follow through from the previous session, particularly highlighting the idea of the liquidation break and having you understand that liquidation break is different than a break that is more meaningful, that would be new money selling along with liquidation. It's very easy to get misled by price. And what we're trying to do is help you break that habit that price is just an advertising mechanism in there. And just because the market broke yesterday doesn't mean it's going to break today. All right, so the market open, the low is still very questionable. It's a tick above unchanged, and you can see the range is fairly narrow. Okay, back down. Okay, now we're exactly at the settle. So the market's done kind of what we expected to come back down there. Let's speed it up to 10 times.
We're at 10 times right now.
Okay, so we're at 10 times. Okay, and there it goes. As we said earlier, the very prominent point of control from overnight. The market's now just a tick above it. But, when the market's traded that much at one price overnight, it's very easy to get pulled back to that same level. All right, so very narrow range in the first half hour. How much time do we have left in the first half hour?
A little less than 9 minutes.
Okay,
8 minutes
so
now.
You can see we're within the overnight range. We're within the previous day's range. We've been back and forth through the settle. So there's a lack of confidence to begin with. Okay, let's speed it up to about 15 times. Okay, we're going to change time frames very shortly, or change time periods. And we say, okay, so we've made it to the overnight high. Again, a very mechanical reference. No surprise at all that we got there. Now the market's testing to the downside. And you can see B period is just a tick below half back from the first session. And that is just a little bit above the opening. So again, still very mechanical references. The B period is at the overnight high. We're now back through the half back to the exact opening in the second half hour. So opened within the previous day's range. The expectation is for a rotational day. Additionally, remember, when you open within the previous day's range, you can expect chop. And when you've got chop, the best thing you can do is just sit out the market. Now, I know a lot of times traders get too anxious. They come in the morning, they're anxious, looking for a trade. And I'm telling you, when you open in the previous day's range, also within the overnight range, the expectation is for a lot of early chop. So here we are well into the second half hour, and we're still within the range. We've had a tremendous amount of chop. If you couldn't avoid trading in here, the chances are you've done a couple of trades. Chances are they're either losses or break even. You had commission and spread between the bid and ask to it. Not very productive. Okay, so a relatively narrow range. And the narrow range, when a range is this narrow, the odds are that we'll get some meaningful range extension, either one side or probably both sides. Okay, let's speed it up to about 20 times. Again, we didn't plan to spend a lot of time on this day. We just wanted to show the carry through from what we saw the liquidation on the 19th. Okay, we're still within the previous day's range. We've commented on we had a poor high from the 19th. And the market's well aware of that poor high. Okay, still we're in C period. Outside above the overnight high, we said early on, when the market traded exactly there, that was relatively weak. Now the upside, the market is still pushing higher, but remember, we're still within the the range from the 19th. Okay, let's go to about 30 times. So we're just playing this day out fairly quickly. We're continuing to get chop. Chop is expected when you're within a previous day's range. When you open within the previous day's range, what is that telling you? It's telling you that the market remains within short-term balance. So following the liquidation from the previous afternoon, without any downside carry through, the market is exploring where it can find activity or where it can find, meaningful buying or selling. And so far, it's not finding that. Back within the overnight range, not by a lot, but just a little bit. So many times when traders see price break like they saw on the 19th, they get biased and they start to get a downward price expectation in their mind. Got to avoid that. That's why we're playing on this day, following through from the 19th, to showing you that the price break doesn't necessarily mean the market's going lower. It just means that you more than likely that inventory got too long in a very short-term time frame. As we got near the close, there was liquidation of that inventory. All right, we said the odds were pretty good that following a liquidation break, the market worked its way back towards the previous day's high or towards the point where the liquidation break started. And you can see that is exactly what has happened this morning. We haven't gotten there yet, but you can see the market is headed in that direction. Still, there's a lack of confidence for changing time periods. Still within the previous day's range, still no real confidence in this market. Back down into the overnight range. We're getting rotation. We're not one time framing. Both B period and F period have taken out previous lows. So that's another way to look and say, okay, the market is in balance. Also, look at value. Value is within the previous day's range. However, value is in the higher end of that range. So there's no real destruction of this market. Lack of confidence, a lot of rotation, pretty much what's expected when you open within a previous day's range. Okay, we've come back down. Remember before we were one tick short of trading at the overnight very prominent point of control. We've now come back and cleared that up. We have taken out the very prominent point of control. Still within the overnight range. Value is still building higher relative to the previous session. As advertised, we still have rotation in the market.
Actually, isn't value, it's within the previous day's value?
It's within the previous day's value, but however, notice it's at the higher end of the previous day's value.
Okay.
I mean, that's a minor distinction, but it is one you notice. Now, I mean, as the day goes on, it could pull it down. But I'm always looking to see where's value relative to the previous day. Yes, it's inside, but I want to see where it ends up relative to the previous day. About centered, more to the upside, more to the downside.
Okay.
Okay. So the market, we're moving pretty quickly. Well into the day, and we still have a choppy rotational market. One of the things that I say so often, there is no shame in not having a trade on. When you get markets that are hard to read, and this is certainly one of them, there's no shame just sitting the market out. Okay, back through half back. See the rotation going on. Remember, we still have a poor high from the previous day. All the auctions remain up, so it's not uncommon that the market would trade with the direction of the auction. Okay, let's really speed it up. Let's go to 50 times. So we're going through this day very, very quickly. The importance is just to see some follow through relative to the previous session. It's also a great educational day to remind you that when you open a previous day's range, probably choppy, no requirement to trade. The poor high from the previous day also has to be totally kept in mind. And we're looking to see where does value build relative to the previous day. Yes, it's inside, but more of the values to the upside than to the downside. Okay, now let's stop for a second. We have tagged the high from the 19th. So now the odds are huge that we're going to take out the high from the 19th. Now, as a short-term trader, again, every trader's got a different style. But as a short-term trader, the market tagged that high and pulled back. I think it's a legitimate short-term buy on the pullback, simply because the odds are so good you're going to take out the previous day's high. Now, in a rotational market, it could take some time, and you get some rotation ahead of time. I just point out, I think the odds are pretty good that will be taken out before the day is over. Okay, let's go back to 50 times. A lot of volatility, so if you tried that trade, you're extremely nervous. All right, so let's stop here. Okay, so it did take out that high, but that's tricky because now we're playing at 50 times speed, but it came back through that very, very quickly. And when it comes back that quickly, then you've got to be very cautious that there was some real selling there, and the market can easily start to trade lower. All right, let's continue to play. Okay, market's going down. Just a couple ticks or ticks short of the overnight low. A very mechanical stop with the J period low. A lot of volatility. Back up towards the highs. Okay, so we've seen, as you know, we get pretty close to the end of the day. We've seen that there was no downside follow through from the liquidation. The poor high from the 19th has been taken out. Value is inside the previous day's range. However, you know, the value is closer to the high of the previous day than to the low. In other words, there's no real selling. We're in some rotation, but so far it looks like the net is the market still has an upward bias. It's not strong enough to really find acceptance above the previous day's high, strong enough to take it out. But the market's been up for some time, and we've got additional liquidation, but we don't have any real meaningful selling. Okay, so
It
we're
was
right.
an FOMC minutes day.
It was?
Yes.
Yeah, and that's the way it traded. You've got news, and that news gives a lot of volatility to the market. But again, you know, applying the same rules we've talked to would have helped you, you know, get hurt or get chopped up on the FOMC day. Early on, we said the market would likely be choppy, and it was. All right, so we're at the close, and the market is holding the high. Value is unchanged, but it's still within the previous day's range. We do have an excess high, and we do have an excess low. All right, so that's all. We just wanted to show the continuation from the 19th and just give you a little more depth. Thank you.